All right, for this video, I wanted to go over the IRS Form 8283 for non-cash charitable contributions. And specifically, I want to look at an example where the taxpayer donated a used vehicle to a charity. So how do they go about completing the 8283? What rules do they have to be mindful of? So we've got the 8283 in front of us here, which we'll go through. And we do also have a sample form 1098C. You would receive this from the charity after the vehicle is donated. And then I also have just 2 slides here covering some background on non-cash donations and then the fact pattern that we'll be working with. So just some of the basic on this 8283 form. So this is used to report any kind of charitable contribution that is not cash, right? So any kind of property. So that includes vehicles, used clothing, furniture, publicly traded securities, things like that. Now, under certain conditions, you might need to attach an appraisal to this form. And so that's what we're going to see with our vehicle donation example is the taxpayer got an appraisal so they could figure out what the true fair market value was, because that's the amount that we're going to be claiming a deduction for. Now, other things you don't need an appraisal. We'll talk a little bit about some examples there, but in this example, we will need to have one. Now, what are the limits on the deduction? So the limits, we really have to consider a couple of things here. So the first one is, what kind of property are you giving? Is it cash or is it another type of property? So ordinary income property, capital gain property. And then also we have to ask ourselves, well, who is it going to? So different rules apply when you donate cash or property to public charities. Is it going to a private operating foundation, a non-operating foundation, a donor-advised fund? A lot of different nuances to these rules depending on, again, what are you donating and to who is it going to? So the easiest one is really cash, right? So cash contributions to public charities, you can deduct the cash amount up to 60% of your AGI, so that's the limit. And this 60% limit applies for donations through January 1st, 2026, unless that's extended. So historically, you were able to deduct cash up to 50% of your AGI, and then the Tax Cuts and Jobs Act temporarily made that 60%. Now, cash contributions to private non-operating foundations, for example, the donor can deduct the cash up to 30% of their AGI. So again, very, very important here to be mindful of who are you donating this to, right? So there are a lot of 501c3 organizations out there, but not all of them are the same. Now, what do we do when we have property? So donations of property give the donor a deduction up to 50% of your AGI. So this was not increased under the Tax Cuts and Jobs Act. It remained the 50% amount. Now, we have to ask yourself, okay, when we have property, we think of what our basis is, so what we paid for it, but the amount we deduct is going to depend on whether the value increased or decreased over the years. Now, generally, most property we have that we donate to charity decreases, right? So if I buy a piece of furniture or if I buy clothing, within a few weeks, that's depreciated in value, right? So very rarely do you have something increase in value. But when we have property that decreases in value, so if we donate a couch that we purchased 4 years ago for $1,500, obviously the value depreciates because we've been using it for 4 years. And so on the date of donation, it's worth, let's say, $600. Well, the deduction we can take is a $600 non-cash deduction. We don't deduct our original cost basis. We deduct the fair market value if the value decreased. Now, what do we do if value increases? So again, often this is never really happening unless you're donating stock, right? So some kinds of investments, land, real estate might appreciate. But there's different rules when we have appreciating property that we're donating to charity. So if, for example, we donated publicly traded stock that appreciated in value, we've only held it for 8 months. Because it's short-term property, we have donated what is considered ordinary income property. So when we donate the stock, the fair market value of the stock is $5,000, let's say. Our original cost was $3,500. So we have a $1,500 short-term capital gain appreciation. we have to reduce the amount of our donation by the unrealized gain. So if we donate $5,000 of stock, we don't get to deduct $5,000, right? We would have to reduce it by the $1,500 gain, and then so we would be able to deduct $3,500 in a non-cash donation. But then again, there's always exceptions to rules, and so there are different rules that apply to property that was held long-term. All right, so that's some background on these cash and property donation issues. So let's look at what happens when we have vehicle donations. So vehicles can be donated for certainly a variety of reasons. First, they can be donated to an organization if they're going to keep the vehicle. So let's say you wanted to donate a van to a church or another organization. Well, the vans, if it's a 16-passenger van, let's say, they're very often kept because they need vans to haul people around, right, for their charitable purposes. So you can donate in that context, or it can be donated where the charity is, the whole purpose is to take the vehicle and then sell it to another organization or to another person in need. Now, the donor in both of these scenarios can still get that charitable tax deduction. So generally, the deductible amount is going to be what the vehicle is ultimately sold for. So if you donate a vehicle to a charity and then they sell it to somebody else that's within their community, they'll give you a 1098-C that'll show the sale price, and you can deduct that amount. Now, what happens, and this is the example we're going to look at, if you donate the vehicle to a charity and their intent from the very beginning is to sell it well below fair market value because they're trying to make it affordable for a member of their community. Well, in this case, the IRS doesn't want to punish you as the donor, right? So the donor can still deduct that larger amount, the greater FMV amount. There's just some more work that has to be done here. So let's look at the fact pattern. We'll look at the 1098-C, and then we'll look at the return itself. So let's say we have John, taxpayer, as a used 2018 Honda Accord, right? And he wants to donate this to charity, but specifically he wants it to go to a charity that is going to find somebody that really needs the vehicle, but they can't afford very much, and so they're going to sell it to them at a reduced rate, right? So before the vehicle is donated, John has a qualified appraisal done on the vehicle. So the company values the vehicle at $15,995, and John's original purchase price back in 2019, so a couple of years ago, is $32,050. So John donates this vehicle, and the charity gives him this 1098-C, which reports all the relevant information on it. Now, if we look at the 1098-C, a couple of key components here, right? So we have the donee's name. So this is the charitable recipient, right? So the charity's EIN, and then the donor's name. So we've got John's information here. The date of contribution, so December 5th, 2022. What was the odometer reading on the date of contribution? Year, make, and model, and then the VIN number. Now, as far as the rest of these fields, remember, if you have a vehicle that's donated to a charity and then they sell it, they would also report the sale information if it was done at an arm's length transaction, right? So they would have date of sale, gross proceeds. But in this scenario, we're not reporting the sale information because John is not going to be using the sale price information to claim his deduction. He's going to be using the FMV. So the charity here in Section 5B has checked this and certified that the vehicle is going to be transferred to a needy individual for significantly below FMV in furtherance of that charitable purpose, right? And so the reason why this is really important to John, because this lets him know that, okay, I'm not going to be using information on what the vehicle was actually sold for because it's significantly less. I'm going to be deducting the FMV, all right? So John gets this 1098-C from the charity. He uses it to complete the 8283, and he has also attaches copies of everything to his return to make sure he keeps the IRS happy, right? So if we look at the 8283 here, there's really two sections. So Section A is for property that is valued at $5,000 or less, and then publicly traded stock. In our case, because we have property valued above $5,000, we're going to be completing Section B. So Section B, Part 1 here, information on the donated property. We've indicated in box I that it is a vehicle. And then we complete information down here about the vehicle, right? So we have a 2018 Honda Accord. It's in excellent condition, but it is used. And we've indicated the appraised FMV per that qualified appraisal. So $15,995. We acquired it in 2019. This is, again, really important because if it was a short-term gain property, we might have a problem. But again, the value decreased, so really no. But they want you to indicate how long. They want you to let them know when you originally acquired it, because long-term property, again, has different rules from short-term ordinary income property. Column E, how did we acquire it? We purchased it, right? So we just purchased it at a car dealership. What was our original cost basis or adjusted basis? $32,050. And so the date of contribution there, again, was December 5th, 2022. Now, also very important here in part 3 and 4, sorry, not part 3, part 4 and part 5, we want to have the appraiser sign and date this, and again, we'll attach the appraisal report to the return. And then also in part 5, the donee acknowledgement, we want to have the charitable organization sign off that they did receive the vehicle, right? So the charity is certifying that on December 5th, they received the vehicle, and so you would have the charitable organization name and information, and then have a signature from an authorized representative. So a director or one of the managers there at the group can do that for you. So once the 8283 is completed, then how does this actually get reported on the return itself as an itemized deduction? So the $15,995 is our charitable deduction amount. And so on Schedule A for John, we go down here to gifts to charity, right? And so in this section on line 12, we can see other than by cash or check. And attach an 8283 if the value is over 500. Well, that's certainly us. So we have the 15,995 there. So that's added to John's itemized deductions. And so on his 1040, if we look at page 1 here, we can see that the total amount of itemized deductions he's got there on line 12, 17,339. That includes the 15,995 of non-cash charitable donation for the vehicle. All right, so that covers it for this video. Hope that was helpful. If you have any other questions on non-cash donations, please leave me a comment below. And I look forward to seeing you again on the next video. Thanks.